technologies are not requiring a lot of capital. I call it So for me, it is as an exchange infrastructure provider. Our job is to allow Sachin Tendulkar to also come, and then later on Virat Kohli, and then later on Rohit Sharma, and then Surya Yadav. We need to provide continuously good grounds, fair umpires, good facilities for people. That is what our job is. And as and when things keep on changing faster, the newer technologies will come, newer companies which will take advantage of that technology, that will keep on coming. And of course, the wealth gets created by newer technologies. So for me, whatever you say about AI or drones or 3D printing or newer sort of things which will come on top of that, exoskeletons and all, you are going to see a lot more companies which will come. Earlier, you required a lot of capital to create more capital. 1970s is first time where some of the young companies came, raised funds from the public, became large like Reliance, and then Infosys proved that you don't require a lot of capital to begin with.
Sure.
And now, newer technologies are not requiring a lot of capital. I call it capitalism without capital. And that's where you will see a lot of youngsters aspiring to become entrepreneurs in variety of areas. They'll come raise funds from the markets because despite whatever proclamations and page 3 of newspaper you see, the private equity and venture capital don't fund even 1% or 0.1% of the actual companies that want to be funded. And today I have 22 crore accounts of investors, 11 crore unique investors. 20% of all households in India are now trying to fund the dreams of entrepreneurs. Of course, they also are expecting returns.
Of course.
But basically that is what...
Which are not there right now, but that's okay.
The beauty of India is that now every entrepreneur can try to come, raise funds. Some of them will fail, some of them will succeed, but they will create more jobs, more wealth for themselves as well as for the economy.
Okay. Mr. Thakkar, you've been at the forefront of disruption, if you will, right? What's next to be anticipated from a platform business like yours, or just in general from the Indian platform businesses which are facilitating investing and trading in all asset classes for the Indian investors?
Yeah. See, if you see, technology already came into our market way back in 93, 94, as Ashish Chauhan told. But I think what helped was deeper penetration when we saw deeper penetration of smartphone, internet available to almost like 96% of villages in India. So what I am saying, today we were able to get this kind of like market coming to capital market, stock market, because we gave a good access to them. Sure. It was very easy for them to access the market. Because of technology, we were able to reduce the price, pricing came down. What I'm seeing right now, if you see lots of investors, although they have opened the account, but they are not ready to take their first step. So either awareness about this asset class is missing, or we have to build lots of intelligence in our app. So that is where like broking company like us are investing heavily on AI and machine learning. It will take some time to get that kind of an app to an intelligent level where a person gets his first salary or gets his first kind of an like income stream, and app is able to guide them on next steps, be it investment in equity, be it taking credit, being responsible in terms of their financial management. All said and done, this is my experience, when people in this financial industry also, they do not have kind of a time or kind of like full knowledge about what asset class are available and what's the right way of approaching in terms of managing their financial goals. So I believe AI is a best kind of like tool which can help personalize every journey. See, an app should be able to scan the whole ecosystem, what products are available across, especially for Indian market, for India. And how do we match or how do we kind of build confidence in investor to take first step? I think best step was introducing sachetization of the SIP 250. We have to reduce the cost. What is prohibiting us from introducing all this product in a very sachetized or tokenized or fractionalized way is cost of transaction. If you are able to bring it down by using technology, be it regulator, be it exchange, be it banks, I think that will create a big surge of new set of investors who will start investing 100, 200, 500 rupees. people feel that equity is only for rich, wealthier people. So we have to democratize, we have to build confidence, we have to build intelligence in our app so that it gives confidence to every person in India that even if you want to invest 100 rupees regularly, this can be invested on this app. I see a big kind of like future in terms of blockchain, where underlying asset is anything, not crypto, because crypto we are not comfortable.
Yeah, sure.
But I think I see a great future in terms of 5 to 7 years using blockchain technology so that underlying asset can be anything. It can be real estate, it can be painting, it can be wine, it can be whatever can be invested. And that can be fractionalized to a level where a retail investor can invest. I think you must have heard about Finternet, a project which is now kind of like, I would say, pet project of Nandan Nilekani. And we are also closely working with them. I see a great future in Finternet. It may take 7 to 8 years, but I am a big believer blockchain, an underlying asset, anything apart from crypto would be a great future. And that is what I think will bring all India to this market for all asset classes.
Interesting. Well, looking forward to some of that. Now the question is, will the market buoyancy be their rhythm for the Indian investor to realize that this is yet another period which will pass through? Because the last 4 years have been different in that dips were bought into, people consistently stayed the course, right? This seems to be the current. Now I'm talking about the present. The current seems to be the first one where people are actually a bit shaken up. I see that in conversations. We see that in our show that we do, a caller show for 1 hour, our call Ask Profit, wherein people are now questioning that should we even stop the SIP? I mean, this had never come before. How do you see this?
I'm sure you have tapes of your shows.
Yes.
Just check May 2022.
Okay.
Same thing had happened. Just 3 years ago, actually. So I don't think it's anything out of the ordinary. Markets do not go up in a straight line. They're bound to produce some volatility from time to time. The genesis of this particular one, I think, was the slowdown in growth that happened largely because the government started consolidating its fiscal deficit. And the central bank continued to pursue, I would say, quote-unquote, hawkish policies. And that, I think, set the stage for a slowdown which has, I think, lasted for 2 quarters. In my view, we are already out of that slowdown. The budget was a phenomenal one. I have titled it a magic budget. It continues to consolidate the fisc, but at a much slower pace, so only 40 basis points versus 120 in the trailing 12 months. It has increased capex share of GDP by another 20 basis points to another record high. And of course, it has cut tax rates as well. So it has got an incredible combination for the economy. And at the same time, most importantly, the RBI pivoted. And the market has just ignored what I think is one of the biggest pivots in modern central banking history of India. Where it has gone all out to convert liquidity into positive territory, cut interest rates, and taken the foot off the regulatory pedal. If credit growth doesn't accelerate from 11 back to 17, I'll be very surprised. So, this is like, I am just amazed that people don't see this as an opportunity. In hindsight, they would realize it. It's impossible to catch the bottom. I don't know where the bottom is, but we didn't know during COVID as well. You have to buy stocks. They will go down maybe another 5-7% and you buy more. And I think you come out quite good. Now, are there some things to worry about? Of course, there are lots of things to worry about. But I'm not really worried about President Trump anymore. I think he's put his cards on the table and they look very benign. So this is nothing close to what we thought could be the worst case scenario. I think India has done a superb deal with America last week, which should result in much greater trade cooperation and military cooperation. 2 wars are ending. A third one is being taken off the table. The tariffs which were coming on China don't seem to be coming. So if anything, I think business sentiment in America seems very solid and improving. and it will soon turn in India as well. So my worry was that global growth slows down because of policy actions, and that worry is ebbing at the margin. So that was the biggest concern. And we will get lower oil prices, no wars, potentially lower interest rates in India, a slower pace of fiscal consolidation, a slew of tax cuts, a lot of tax reforms, and higher capital spending from the government.
Can't ask for more, are you saying?
You know, I may sound like a broken record, but I am very bullish at these
No,
these
this
prices.
is great to know, and I see both gentlemen smiling, so I'm going to ask them as well. But Rhythm, I have a follow-up for you, which is a question that everybody is asking. Okay, FI वापस कब आएगा? Right? Everybody wants to know this.
नहीं, देखो, in 2015, when the retail balance sheet started shifting, and by the way, it has not made such a big shift as people think. Trailing 10 years, in Indian households have still put more cash in their cupboards than cash into equities. They put more cash into gold than into equities. So we're still at the tip of the iceberg. We have really not traveled this journey. There are only two players in the market. It's either a domestic investor or a foreign investor. If every morning, even through this fall, at 9:15, if a $100 million bid is coming from domestic investors relentlessly, somebody has to sell. Otherwise, how do you get a trade? Even in the open outcry system, there was a trade, and there the market maker would go short. Somebody has to trade, right? Somebody has to sell. So unless the issuance cycle reemerges, and the third player comes into the market, which is the corporate sector, comes and offers stock, I don't think foreigners can come to buy. Now, a couple of things let me just say here, is that when we look at emerging market portfolios, the underweight position of foreign investors is now to an all-time low. So they are more underweight on Indian stocks than they have ever been in the past. The last position was in 2007. The other thing that I'll say is that India is hurting considerably because of its classification as an emerging market. The emerging market cohort is no longer the story that people dreamed about in the mid-90s. So it is unraveling, and a lot of assets in that cohort are shrinking, and India is facing some of that brunt as well. So it's important, if you ask me, I think India needs to diversify its sources of capital. We need to allow other pools of capital to walk into Indian stock markets, and that would then ensure more secular flows. But in the meanwhile, I think somewhere in the next few weeks or months, I think foreign investors will start coming back. India has considerably underperformed China. China is up 50%.
Yeah.
September 25th, and I have to say in hindsight, I underestimated the Chinese policy stimulus then. It seemed in the wrong direction, but it proved to be a bottom for the Chinese stocks and a top for the Indian stocks. And the relative chart now looks really juicy for India. So those who were waiting for India to get more attractive in valuation terms and in performance term, I think the moment has come. And one last point, I like to measure the Sensex in gold ounces. I've been doing that for 30 years. This is the cheapest the Sensex has been in gold ounces since November 2020.
Sorry, can you explain that?
How much Sensex can you buy with an ounce of gold?
Acha, okay, fine.
Okay. So this is the cheapest since November 20. It's like COVID.
Oh, okay. Okay.
So people like to measure the Sensex in earnings term, in INR terms, in dollar terms. I like to also measure it in terms of gold ounces. So
interesting.
This is the cheapest it has been in 4.5 years.
Wow. Okay. Well, two gentlemen are smiling with that. So, Mr. Thakkar, you've been smiling and wanting to come in twice. You want to add a point here?
Yeah. See, I have seen this market in terms of retail perspective. You have seen in terms of institution, they are far more knowledgeable. But retail are very emotional and sentimental. When a market crashes, next day call comes from customer, abhi kaun trade karega? And I remember in 2000 when this .com bubble happened, and SIP used to be like around 150, 200 crores per month. And .com bubble happened, everybody told that now nobody is going to invest in equity. And today as we speak, SIP book is like running at the rate of 24,000, 25,000 per month. So what I'm saying, till that time, like fundamentals are good, retail would get lured towards volatility, market momentum and all that. But we know fundamental of the country is good. And every year we will see progressive, there will be some kind of a growth in corporate earning. And we are seeing inflation has been controlled. So retail investor is going to come back in a big way. And if you look at, as you said, can we see this next 20 years as shining or as lucrative as it was past 25 years? In fact, I feel it would be better than that. Because that time India was building in terms of infrastructure, in terms of digitization, in terms of, even if you see, demography also was not favorable. Today every household has more earning member than what used to be previously. Now if I fast forward for next 20 years, India would be having highest working population. So all this population who are earning would have no other way but to invest their saving in equity. Now if we talk about today's median age, which is around 28, 29, that means people have just, this young population I'm talking about, have just started earning. And next 20 years also Indian median age would be just 40, which is almost not even like, it is just closer to developed countries. So I think we are yet to see that phase where India, where it is, will go to that developed status. And that is where a serious relationship of family starts with equity, saving, long-term goals and all that. I feel that we are going to see far more better momentum and better phase than what we saw in past 20 years.
Wow. Okay. Mr. Chauhan, last word to you. And I'm asking you to wear a different hat. We have a world-class exchange system. We have world-class brokerages. We have world-class apps to trade. Would love to understand your view next 15 years. We have two bullish views out here. I'm asking you to wear a different hat than the head of the NSE exchange and tell us what do you think about it.
As an NSE head, I usually have no view on whether market goes up
Completely.
or down.
I'm not asking you for the markets.
But,
I'm just asking how do you see
as a person who has observed and also thinks about future, for me, the technology is the only change that creates wealth. Technology brings change, and that actually change brings wealth. Technology waves used to come very slow earlier, so we didn't realize that technology was the change. And technology waves used to come so slow that the wealth also used to be created slowly. Last 30, 40 years, first time in human history we saw in one single generation a full technology play from sort of computer not being there to computer being almost everywhere. And the next layer of technology changes are going to be even faster. So the wealth that is created in last 30, 40 years is way beyond what was created in, say, last 100, 200 years because of that faster change. But the changes are coming so fast that next 30, 40 years will create even more wealth than what was created in, say, last 10,000 years. And it happened in very many periods like Industrial Revolution in Europe and all. And this next 30, 40 years, who creates that wealth is young population. Because they understand new technology, they adapt to it. And basis that, they create new wealth. Of course, that economy had to have a capital. Today, technology doesn't even require new capital to be invested. So if you look at Japan, it's old. China suddenly became old. India, young and technology oriented. Europe is old. America will become old if they don't import people, right? So effectively, India is in a great position to take advantage of that technological waves and the wealth that comes with that, right? So 17% of young population, means 70% of world population, 20% of young population. If they create 25, 30% of the next wealth that gets created, India will have a chance to become rich before it becomes old in next 30, 40 years.
Cross fingers. And America, well, if it has to import people, then that also puts India in a great place, I would reckon. But I think we have time for maybe one or two questions if the audience has questions. So, Alex, Mahima, do we have any questions from the audience?
Where's Mahima?
Yeah, thanks a lot, Parag here.
Okay, we have one question here, yes. Sir.
So my question is for Rhythm. So while I completely agree on these two fronts, that government has started a bit in terms of giving a consumption boost in the budget, and RBI has done a lot in terms of providing adequate liquidity, and those are the foundations of a good growth journey, which we might see after 2-3 quarters. The results might be visible after 2-3 quarters. The only thing which keeps me worrying is US inflation. if because of whatever is happening, and if US inflation inches up, and again we head for a stronger dollar or a stronger US 10-year, then what happens?
Yeah, so I think the turnaround is happening now. It's not 3 quarters later, because you must understand that the government's spending got stalled in the first half of the ongoing fiscal, and a lot of it has come in the second half. So the turnaround is already happening. What they have done in the budget and the RBI's policy pivot will carry that momentum into the next 2-3 quarters. The second part of your question with respect to the US dollar, yes, that is obviously a concern if the dollar resurges as it did after the victory of President Trump. However, I think the signals are as follows. The current administration in America is very business friendly, and it is also very stock market friendly. So I don't expect them to do things that will actually derail the stock market. And including those, in that list, things that get included are things that can upset US earnings. So my instinct is that the US dollar may have done its jig. So that's my assumption, but the risk that it comes back for other reasons is very much a concern for us as well.
Okay. I hope that answers. Any other question? We have maybe time for one more. Yes, please.
Question to Ridham Desai.
Sorry? Okay.
Hello, my question to Ridham Desai. Nowadays, what is debt to GDP ratio of India, China and US? Approximately. Debt to GDP ratio of India, China and USA.
Yeah, there is no comparison. India is at 140% and the US and China are considerably higher. Clearly there is a problem with respect to debt in both the Western Hemisphere as well as in China and Japan. And they have aging populations. So if you ask me, the long-term outlook on global growth is not very good. There is a debt demographic problem which humanity has not faced before, and it will unravel at some point in time. It's very hard to predict when these things take place, but there will be a moment when of reckoning that will come. India, on the other hand, and I'll borrow from what Dinesh spoke about earlier, which is that we are actually on the path where our debt to GDP will rise on an aggregate basis. There will be a shift in the mix. The government's debt to GDP will fall. The private sector's debt to GDP will rise. What is debt? Debt is essentially borrowing from the future, which is spending the next generation's consumption today. So America has already spent its next 3 generations. We're about to start that journey, and that is hyper bullish for stock markets. It will end very badly, but it will happen after this room has left the planet.
Okay.
Sorry, I may have assumed made that assumption, but yeah, I think most of this room would have gone by then.
Okay, which is a fair point. Okay, we have maybe time for one last question, guys. Okay, whoever has, if somebody has the mic here, the gentleman, yeah, whoever. Fine, fine. Just give the mic, whoever, not a problem.
Hello. Very nice insights. But the only concern for the market today is that US markets have gone up considerably, and the valuation metric which bothers a lot of people is market cap to GDP ratio, which is about 207% higher than all the times in the past, even 2008 Lehman Brothers times, 2020 COVID times, dot-com bubble times. So that is the metric which even Warren Buffett follows, and a lot of fundamental analysts track that. So what's your view on that? Although we have a lot of growth triggers for the market, but the valuation concern, could markets still rise considering that valuations are so stretched?
Is this the question on the US markets?
No, I think the Indian market, the Indian debt to GDP. So
no, Indian market cap.
I said the valuations are stretched in USA, but there's always trickle-down effect on Indian markets also. So that's the global risk which could impact the Indian markets.
Global, yeah, indeed. Okay. Yeah, Ridham, why don't you start? Maybe
so India's correlation with global markets has reduced a lot, and there are fundamental reasons for that, and we don't have time for me to go through all those reasons. But in technical terms, the beta, the relative sensitivity of Indian stocks to the world is now down to 0.4. It used to be 1.3. So we are less affected by this, but of course, if America were to enter into a bear market, it is unlikely that the rest of the world does not react to it. It will.
Okay. Mr. Thakkar, you want to add to that before we wrap up? I mean, do these ratios worry you? I mean, you've seen many cycles. Do these ratios worry you?
No,
so
not
much?
at all. I think currently, if I look at our ratio, it is like quite reasonable. And we have seen fluctuates from, say, like 50% to 150%, and currently it would be around 105, 6% something.
It's down to 100 now.
Yeah, so down 100. So I think we are reasonably priced that way. We are just waiting for that kind of trigger point when he starts investing. And which is when he starts investing.
Yeah, well, that's good to know. Okay. Well, Rhythm, the onus is on you to start investing and your clients to do that. But no. But thank you, all three of you.
See, I'll make the final point. Every day, flows are net zero in the market. Flows don't matter. What matters is liquidity. That's different from flows. Liquidity comes from the confidence in growth. A moment will come in the next few weeks when people will say, oh my God, it's looking so nice. We are buying stocks.
आपके मुंह में घी शक्कर सबके मुंह में घी शक्कर because you three have sounded so bullish. A round of applause for our lovely panel here. Thank you so much for joining in, gentlemen. Really appreciate your time. A past, present and future of the Indian markets and the Indian investor. Lovely talking to all three of you. And thank you all of you for listening.
Big round of applause, everybody, please. Let me